Welcome to the Kapital News. I am your host, Alex Karitis. Today is September 11th, 2019. Thank you so much for joining me. So yesterday, the podcast was discussing John Bolton, the former National Security Advisor, his ouster, his being fired and departing the White House. Again, thank God that day didn't come soon enough as far as we're concerned here at the Kapital News. But that news feed came to me via Twitter on my phone yesterday morning. And that was pretty much the crux of yesterday's podcast. Today, we're also going to focus on some more tweets that came across my phone this morning and later this evening from none other than Thunder Thumbs, the tweeter-in-chief, President Donald J. Trump. Now, the one that just came through a few hours ago is in regards to US-China trade talks that reads the following. At the request of the Vice Premier of China, Li He, and due to the fact that the People's Republic of China will be celebrating their 70th anniversary on October 1st, we have agreed as a gesture of goodwill to move the increased tariffs on $250 billion worth of goods, 25% to 30%, from October 1st to October 15th. Now, I don't know if the administration intentionally set the date for October 1st, being fully aware that this was the anniversary for China, their 70th anniversary. But nevertheless, this was broadcasted in the news very, very shortly thereafter. So the administration was definitely aware of this fact. Whether that was a calculated move, I don't know. I wouldn't be surprised. I'm sure somebody was aware in the administration. But nevertheless, this is being walked back. The tariffs are still on, at least for now, but it's just being delayed for another 2 weeks. It was supposed to go up from 25% to 30% on October 1st. As a gesture of goodwill, we're delaying that for another 2 weeks. They will be back on the table and implemented on October the 15th. This is, of course, assuming that the delegations between the United States and China don't get together before that and strike some sort of a deal or delay things further, perhaps the second trade truce in as little as 3 months, because it was only in the back of the end of June at the G20 summit in Osaka, Japan, that President Donald Trump and President Xi of China had their little trade truce, which did not last very long at all. So we'll see if this is going to happen. This is a sign of goodwill. We had the Chinese come out the other day and say we are going to exempt certain U.S. goods from the tariff list. Of course, that did not include U.S. agricultural products and pork, but nevertheless, they did remove some U.S. goods from their tariff list. So this is a little bit of back and forth. This is a good thing. You know my view on this trade war. Nobody wins these trade wars. You have the Chinese government implementing further stimulus measures of their own, cutting reserve requirements, interest rates on their end, doing some other things to try to stimulate their economy at the local and state and provincial level. And now we also have here in the United States, we have our farmers being bailed out to the tunes of tens of billions of dollars. We're either on the second or third round of bailouts already. So nobody wins these things. We have U.S. Steel, the company. I've discussed this in previous podcasts too. I haven't looked at their share price recently, but when we talked about this a couple weeks ago, since the tariffs were placed on U.S. steel and aluminum, U.S. Steel has lost 73% of its market cap, 73% of its value. So believe me, folks, these trade wars are not good ideas. Nobody wins. So, I mean, it's like who thinks they're the tougher guy, who's going to be the last man standing is not necessarily the winner. So we'll see. Let's hope for some sort of resolution. But we've been told that everything was going to be great and we were in the final laps. There's going to be a signing ceremony back in March. And, of course, it's been nothing but further escalation. So my apologies, sorry, not sorry, for not trusting the Chinese or, unfortunately, this administration as well as to what's actually going to take place with this deal. So that's one of the tweets that came through this evening. And the other one that really got me going earlier today was the fact that Donald Trump, now while we've discussed this many times over, that the president has been talking about lowering interest rates and perhaps, he has called for further rounds of quantitative easing, which is debt monetization. It's money printing by the Federal Reserve and just throwing that money pretty much willy-nilly out into the marketplace for the benefit more of the upper echelons of the income bracket. But nevertheless, he sort of shied away from coming out and saying we need to go to negative interest rates. Now, he's somewhat alluded to it before, and we've said, that's not good policy. I said yesterday, I've been feeling compelled to tweet the president because of the stupid things that he tweets on a near daily basis. And I had a tweet at him yesterday, and I said, thank God, it's about time that you fired John Bolton. You got to fire Peter Navarro next, #fire Navarro. Now he comes out with the following tweet. The Federal Reserve should get our interest rates down to 0 or less, which of course would mean negative. And we should then start to refinance our debt. Interest cost could be brought way down, while at the same time substantially lengthening the term. We have the great currency, power, and balance sheet. The USA should always be paying the lowest rate. No inflation. It is only the naivete of J. Powell and the Federal Reserve that doesn't allow us to do what other countries are already doing. A once-in-a-lifetime opportunity that we are missing because of, quote, boneheads. So that was the one that got me going earlier this morning, because this is ridiculous. I have tried to give this president credit. I've tried to give him advice. I've been saying since we've started this podcast back in February, the fact that this president and his administration have taken ownership not only of the economy, which is, somewhat typical of politicians and in presidential administrations, but he's also taken ownership of the stock market like an idiot. You don't control either. And if you do, we got a problem, because this is supposed to be a free market capitalistic system. If we have somebody, an individual or a couple individuals, controlling and pulling these levers, that's way too much power, and that's not how it's supposed to work. So investigate these individuals, whether that's the president, the Federal Reserve, have at it, because that's an abuse of power. That's not in the Constitution. He does not have that type of authority, that type of power, nor should he. So it's one thing, again, to take ownership of the economy, another thing to take ownership of the stock market. So everything that this president has been doing with these tweets is just trying to prime the press, is just trying to prime the pump here, trying to inflate and reflate the stock market, which, by the way, is, and we're going to get to those numbers later here today, are near record highs once again. So that's quite interesting. We have 50-year low unemployment. We have inflation that is in check or near the Federal Reserve's target of 2%. And we have a stock market that's about to make new record highs. And we might have a trade truce or maybe even some sort of trade deal. So what's the problem? So why would the Federal Reserve need to go to 0? Why would the Federal Reserve have to embark on maybe even negative interest rates? Why would they have to embark on another emergency round of quantitative easing? This makes no sense whatsoever, but nevertheless, Thunder Thumbs wants to tell you what to do. So before it was, let's cut by 50 basis points. Let's cut by 100 basis points. Now it's let's go to 0. We're at 2% now, so that's 200 basis point cut. And we could even go to negative. All right? And like I was saying, you want to take ownership of this stuff? I was trying to give the president a pass and saying, look, what has been set in motion has been set in motion. You can't stop it. Okay? You can't stop it. Nor should we. There's too much malinvestment out there, but nevertheless, they took ownership of it. And I tried to give the president some leeway and say, okay, now with this tweet, I'm done with him. I'm done with him. I'm done giving him leeway. If he wants to continue with this nonsense, I'm going to blame him. He's now responsible. He's put this on his shoulders like an idiot. I've tried to give him time to sidestep it. I've tried to give him time to be a little bit smarter about it. Now he wants to call for negative interest rates. I'm done with him. This is a terrible policy. This is not good for the American people at all, at all, at all. Ask the Europeans how they're doing. They're about to go into recession for the second time since the Great Recession. They keep going in and out of recession depending on the country, but now it's basically the entire European Union. And we still have the chaos surrounding Brexit, which will not end well, even though I am for Brexit. It's just the chaos of all of these bureaucrats and these politicians who do not lead. So that's going to cause more uncertainty, and it will cause economic angst for a period of time. I never said it was going to be easy. I just believe that it is the right move for the British people to leave the European Union. So Donald here is calling for negative interest rates. We have nearly $17 trillion in global negative yielding bonds. That in and of itself is ridiculous. The malinvestment that's causing is unheard of. The other thing that's somewhat perplexing here from the president's statement is talking about, we need to refinance our debt. We've been refinancing our debt since day one. That's what you do. You kick it down the road. You roll it over. Furthermore, he wants to talk about lengthening the duration. So what he means by that, ladies and gentlemen, is we have bonds of differing duration. We have 1 month, we got 3 months, we have 2 year, we got 10 year, 20 year, 30 year, right? We got the 30-year bond. Well, the 30-year bond was below 2%, a week and a half ago? Below 2%, a record low. How much lower does he think it's going to go? If he wanted to roll the debt over, lengthen the debt, he should have told Secretary Mnuchin of the Treasury Department, hey, go out there with a big ass auction and just prime the press, issue as many bonds as we can at 30 years. Just do it. Now we're talking about even further, maybe 40-year bonds, maybe 50-year bonds, maybe even 100-year bonds. Talk about kicking the can further and further down the road. Why don't you cut spending? Why don't you drain the swamp, Mr. President? I thought that's what you were elected to do. Not even close. Not even close. Ladies and gentlemen, negative interest rates will destroy the financial system. It will destroy savings. If anybody is trying to save, if anybody can save in this country, it entirely flips the incentive structure upside down. It basically rewards those who have taken reckless risks, who just pile on more and more debt, and it does so at the expense of people who are trying to do the right thing. And that is trying to save. Maybe putting off going on vacation. Maybe putting off purchasing a home or a car because they are trying to save. Maybe they don't go out as often because they're trying to save. They're trying to be prudent. They're trying to pay down the debts that they may already have, whether that's student bills, whether that's their car loans, their mortgage, whatever it may be. Maybe they're just trying to be prudent and save for their retirement so they don't become a burden to society several years into the future, when they're going to be crying to mommy and daddy government that we need a handout. So, you have this guy, Donald Trump, coming out and always saying that he's the king of debt and loves debt and it's always been good to him. Of course it has been. Of course it has been, because he has piled on loads and loads of debt on various corporations that he has started that have eventually gone bankrupt. And in the midst of all of that, he has paid himself handsomely. And what's his excuse? Well, I wasn't dealing with grandmothers. I was dealing with some very shrewd business people, and they knew the risks, so shame on them. So basically he's saying, I'm not a good risk, but you gave me that money anyway. I'm going to take it, do what I want with it. I'm going to saddle these companies with big loads of debt. We're not going to make any money. We're going to file bankruptcy. I'm going to walk away smelling like a rose, and you're going to have to take a huge haircut on all of that money that you lent me. Now, is he going to do the same thing with the United States of America? It seems like it. Sounds like that's what he wants to do. We don't have to go into negative territory for that to be accomplished. I mean, you're going to have to pay the bank. That's what that means. You have money in a bank, they're just going to take it out of your account. Okay, they're just going to take it out of your account. That's what that means. You put your money now in a savings account, they use the money, okay? You're supposed to get a piece of that back. Now, not going to happen. They're just going to take some money out of your account, little by little, little by little. Is that what you want? Is that what you want? Or furthermore, if you want these negative yielding bonds, you hold them to maturity, you are guaranteed to lose money. You are guaranteed to lose money. How is that good for pension funds who are already underfunded? And that in and of themselves could be a catalyst to this next recession or financial crisis, believe me when I tell you. You have insurance companies who are trying to do their best to delay the inevitable being that they are going to go bust. They're going to go bankrupt themselves because they can't make any money on bonds. You're in Europe. They're not making anything. They've been in negative territory for quite a while. And we have the European Central Bank meeting tomorrow. So the president of the ECB, Mario Draghi, who is set to leave, so this is basically his swan song here. He is also leaving on Halloween, which coincidentally is the hard deadline for Brexit. He's gone. And then you're likely to get the former managing director of the IMF, the International Monetary Fund, Christine Lagarde in there. So Mario Draghi, Super Mario as they call him, is likely to cut interest rates as well as the council with the ECB. But that's likely what they're going to do. That is what markets are anticipating, that they are going to go even deeper into negative territory, and that they might even start more rounds of quantitative easing. Markets are at least anticipating that the ECB is going to lower rates further, deeper into negative territory, and will at least announce that they will be beginning another round of quantitative easing. They might at least announce. So that's forward guidance. That's the lingo. That's the PR. I told you they were going to start changing the lingo. They were going to start talking about all this crap. Now a lot of it's about forward guidance. So it's not just the policy itself, but it's about the forward guidance. And that's supposed to move markets, and it's supposed to sort of string them along, just like we've been strung along by the administration with the trade deal. So this is all we're doing. This is just kick the can further and further down the road. And we have heard from European banks, CEOs, CFOs, that these negative rates are killing the banking industry. We know this. I just said it. They know this. They're not making any money. We just said yesterday that Societe Generale, a French bank, is looking to cut nearly $700 million. They're looking to cut $700 million worth of costs. Well, you know what that means. It's going to mean big layoffs. We know Barclays, we said this yesterday as well, Barclays Bank, a British bank, is looking to cut a significant amount of people from their trading unit. I think most of those are going to be affected in Japan. Well, what a surprise there. What are the interest rates in Japan? Oh, they're negative too. So somebody is going to have to enlighten me on the stable genius in the Oval Office who is now dictating to us or is telling us that we should have negative interest rates here in the United States and embark on another round of quantitative easing. This guy is desperate. I mean, because one of the other funny things, not so funny, but it somewhat was if you're looking at the president's Twitter feed, and on that statement there in regards to the negative interest rates, so you scroll down and you obviously see people's comments, and of course I had a comment to him too. You scroll down and there was somebody who gave a screenshot of a previous tweet from the president when he was citizen Donald J. Trump. And what did it say? It said the Federal Reserve is creating bubbles. These low interest rates are destroying the economy. Now he wants them. This was one of the main reasons I voted for the guy. I've told you this. This was one of the main reasons I voted for Donald Trump. I did not trust Hillary Clinton. I really didn't trust Donald Trump, but I said, you know what? There's no way I'm voting for Hillary, given her record. Donald, we need to shake up the system. If there's somebody who's going to do it, it's not going to be Hillary. I only had Hillary or Donald Trump. I went with Trump. I put aside a lot of the questionable ethics and the moral character and all that stuff and some of the rhetoric. I said, well, he's just a showman. He's just out there. He's braggadocious. He's just exaggerating. It's just a little bit of a show. Surely, when he gets into the Oval Office, the gravity of it all will weigh on him, and he will understand that he's the president of the United States, and a lot of that will go to the wayside. But a lot of the statements that he has made during the campaign surrounding the Federal Reserve, I was like, well, this guy gets it. Finally, somebody's talking about it other than, Ron Paul or his son, the Senator Rand Paul. At least he's going after him. At least he understands. Maybe he does understand. Maybe he's going to do something about it. Nope, now he's in there. It's my economy. It's my stock market. I want this bubble to continue. Obama had low interest rates. I'm Donald Trump. I want low interest rates too. And that's what he's calling for. So I'm done with him. I wish him well with the trade war because I don't like it. I wish him well with peace talks with everybody and their mother because we're on the verge of going to war with everybody, whether it's Iran, whether it's Venezuela, whether, it's North Korea, whether it's the idiots over there in Pakistan and India going at it over Kashmir. I mean, it's everywhere. It's everywhere. And I wish this president and his administration well because, like him or not, he's there. He's the guy in the middle. He's got to deal with all of this stuff. I want him to succeed when it comes to peace and prosperity. But now he is talking about economic policies that have screwed this country and are continuing to do it, and he wants even more of it. He's desperate because he has taken ownership of these things, and he has an election coming up next year. And he just wants this market to take off. And another thing that he is starting to consider, at least these are some of the reports out there, is that he wants to consider capital gains tax cuts. Folks, this does not help the everyday man and woman. It just doesn't. Most Americans don't own stocks. They don't own financial assets. We talk about that here all the time. This, again, he's trying to help the upper echelons of society. He is trying to give more stimulus, more adrenaline to the stock market because that's exactly what that would do. This is who he's focused on. He's not focused on the everyday man and woman. Farmers are going through bankruptcy. Factories are once again shutting down, even though they opened up for a photo op. They're now shutting down as this trade war continues, as the global economy continues to slow down, which it was doing before the trade war. The trade war is just exacerbating the problem. Again, it's smoke and mirrors. This is more to do about geopolitics and a superpower, the United States, attempting to slow down the rise of a rising superpower, that of China. Soybeans or whatever. Cattle futures, pork bellies or whatever. Okay? So, of course, we keep our eyes on it, but, I mean, that's the everyday man and woman. It's not the capital gain stuff. I mean, because it was only a few weeks ago when everything, the word recession was really thrown around there with the yield curve inversion, and they were talking about, well, maybe we're going to look to cut payroll tax. Now, that would help the everyday man and woman a lot more than a capital gains tax cut, but that's now off the table. Now, a capital gains tax cut, I don't think is likely, given the fact that Nancy Pelosi and the Democrats control the House. But hey, who knows? Maybe it would happen. I doubt it, but we'll see. Especially not in a political year. But hey, who knows? He's the art of the deal maker. He could do what he wants. We'll see what happens. But I'm skeptical of it, and I'm ashamed that the president is doing these types of things. Again, to me, this is blatant market manipulation. This is trying to pump the market because he has a political campaign coming up. To me, it's shameful. It doesn't solve anything. But to the markets, we had the S&P gain 21.5 points, up 0.7%. The Dow gained 228 points, a gain of 0.8%. The Nasdaq gained 85.5 points, an increase of 1%. And the Russell 2000 gained 33 points, continuing its strong rally, gaining 2% for the day. The Dow Jones Transports gained 0.8%, and the New York Stock Exchange gained 0.7%. Oil pulled back from yesterday's podcast. WTI is now at $56 a barrel, and Brent is at $61 a barrel. This is on the back of OPEC coming out and saying, well, we imagine that the global demand for 2020 is going to be low. Well, what a surprise. What a surprise. We have gold right at $1,500 an ounce, and we have silver at $18.11 an ounce. Again, folks, as I say here and have been on a daily basis, I do believe that the precious metals market are in the very early innings of a bull market. Any type of pullback, to me, is an opportunity to buy more of the yellow and white metals. Whether you own them outright physically or whether you own them through ETFs or mining stocks, maybe all of the above. Wouldn't be a bad idea. We have the U.S. 10-year Treasury gaining another 2%, but still yielding right around 1.7%. Again, quite the rally in yields on the quote-unquote safe haven asset of Uncle Sam's Treasury notes. We have the VIX, the volatility index, losing another 4 percentage points today and is now trading at $14.61. This is another level to be mindful of because once you start getting to these levels, does it start to reverse and does it start to go up? And if the VIX is going up, the fear gauge starts going up, that means the markets are selling off. So this is just something to be mindful of, and that's why we talk about the VIX, the volatility index, here on a daily basis. Just something to be mindful of. So the markets are near all-time highs. We have the S&P 500 back at 3,000. So again, it begs the question, as we said at the top of the podcast, we have 3.7% unemployment. We have inflation near target. We have a stock market at or near record highs once again on the S&P, the Dow, and the Nasdaq. We have perhaps a trade truce. And somehow the president's calling for negative interest rates and quantitative easing. I mean, these are emergency measures. I thought everything I just rallied off was good news. I thought everything that the president has been saying has been good news. Is this not in the midst of the greatest economy in U.S. history? Isn't that what we're told on a near daily basis? So why would the Federal Reserve have to embark on emergency measures that were enacted and implemented during the depths of the Great Recession? Something that was not witnessed in generations. Can't make this stuff up. It is truly shameful. There's no other way to put it. This is complete manipulation. This is a con job. So everybody who wants to go out there and say that Donald Trump is a con man, I mean, he's giving you evidence that this is the case, that he's all about pump and dump. That's all this is. Let's just pump this market up, because I'm telling you, folks, the further this can gets kicked down the road, the worse it's going to be because the day of reckoning always comes. We have record amounts of debt at the government level, the household consumer level, the corporate level. I mean, it just doesn't work. I'm trying to talk sense into some of these people, but I'm a one-man army. That's why we got to grow this podcast. That's why we got to grow the channel. You got to educate as many people as possible. I want this country to succeed, but it's not going to do it on a foundation of sand. And when we have as much debt as we have, and when you have the president and the Federal Reserve likely to go back to zero and perhaps even negative interest rates or quantitative easing, that's exactly what we're building. We're building a foundation on sand, and that's not good for anybody. So we got to talk some sense into these people. We really do. So obviously this is the 18th, right? The 18th anniversary of 9/11. I'm sure most of you remember where you were that day. I was a freshman in high school. I believe it was the first week of school, probably only the first couple of days of school. And the only thing I don't remember is if it was first or second period, but it was Spanish class. And I remember a teacher from across the hall came running across the hall into our room, basically just screaming that we're under attack, and turned the television on, because there were televisions in all the rooms. And we turned the TV on, and pretty much for the rest of the day, that's what we witnessed. We just continued to watch the horror and the terror of that day. A tragedy. It's amazing that it's been 18 years already. A lot of children of people who lost their fathers or even mothers at that time are now about to enter college. So I mean, it's quite remarkable that it's been 18 years, and obviously our thoughts and prayers remain with those victims and those families. But we have to put an end to all of this stuff. The Kapital News is about peace and prosperity. It's about the truth, and it's about free market capitalism. And we just talked about National Security Advisor John Bolton getting the axe yesterday. And, a lot of the foreign policy that we've been adopting for quite a while in this country, he's been the architect of, or he's been an advocate and strong proponent of it. And this nation building and going all over the place, throwing our muscle and weight around as if we own the place, is ridiculous. And it causes people to become upset, just like we would become highly upset if the Chinese started throwing their weight around in this country, or the Russians, or the Turks, or the Italians, or the Brazilians, or anybody for that matter, telling us how to live our lives, what president to install in our government, what type of parliament or Congress to have in our country, and then to take our land, our agricultural resources, our energy resources, our mineral resources, and say, the hell with you. I mean, we wouldn't like it very much at all, but that's what we have been doing to other countries around the world for decades. And so when you have blowback, when you have people who are willing to fly planes into buildings, you got to ask yourself what's going on here. And, with what we were just talking about earlier throughout this podcast, we got to wake up. We have to wake up. We have got to stop doing the things that we are doing, because we're not going to solve these problems with the same level of consciousness that has created them. So we should pray for peace and prosperity for everybody. But this is 9/11, and I'm sure a lot of you have a lot of personal stories, and I'm sure it can be an emotional day for many people. But that's where I'm going to sign off for today. Be sure to check out thecapitalnews.com or our YouTube channel, The Kapital News. I will be posting a couple more videos. Hope to have those up later this evening and tomorrow. This is going to be a continuation of our video presentations where we're talking about recession variables and just trying to see where we are within the business cycle. We're going to be focusing on these next couple of videos on the yield curve. We're going to be looking at the 10-year Treasury versus the 3-month Treasury note and bills, and we're going to be looking at the 10-year note against the 2-year Treasury note as well, just to see where we are in this business cycle and if they are predictive for forecasting a recession. So I hope you check those out again on thecapitalnews.com or our YouTube channel, The Kapital News. So stay diversified, stay vigilant, and stay with The Kapital News. I am Alex Koritis. Godspeed.